Now, we said that there are 5 statements: income statement, balance sheet, cash flow, statement of changes in equity, and notes. We understood how to prepare income statement, and we understood how to prepare balance sheet. How you do that? We should have a document called trial balance. From the trial balance, we will prepare a P&L and a balance sheet. That's clear? That's what we do. Now, this is an intermediary statement, cash flow statement. For me to prepare a cash flow statement, I should have a P&L and a balance sheet. Before you have a profit and loss account, you can't prepare a cash flow statement. So, this and this is compulsory. Right? Second point, for me to prepare a cash flow statement, at minimum, I should have 2 balance sheets and 1 P&L. What do you mean by this? Now, 2021, 2020, I must have balance sheet. P&L, which P&L I need? I need P&L for this. This not important. Okay? So, this is the second scenario. This is normal general understanding. Now, based on the standard, now we talk about standard. IAS. So, any given accounting standard, there is a way of reading it. The very first point is that objective. What is the objective behind studying IAS? To understand the accounting rules required to prepare a cash flow statement. To understand the rules required to prepare a cash flow statement. Number 2, this is objective. Second one, definitions. They will use some technical terms which you need to know the meaning. So there are actually here 6 terms they will use. First one, what is this? What is cash? Yes. What's the meaning of cash?
Cash is the 100% as of that particular deal.
About. What you call rules. Rules are the road language. Professional language?
Mal.
Not good.
Not that. Sure. What do you mean by that? Any resources which I should be able to use for my needs without any time difference and without losing the value of it. I am feeling like I need eat an ice cream. 10 riyal. So I am outside the shop. So what is the cash? I see in the pocket. Okay, I have 10 riyal, I go and buy. So that whatever the cash available in my wallet, in my pocket is one example of. So when I take 10 riyal, I go to the ice cream shop. They say that no, my friend, this is the value is only 9 riyal. Then that is not point number 1. Point number 2, there are other types of cash also. I see I don't have cash, but I do have my PAN card. There is one Sharrafa outside, ATM. I insert, I withdraw 50 riyal. Let's say my cash balance, the bank balance, before withdrawal is 2000 riyals. Now I withdraw 50. After checking the balance, it should not be 1945. You understand what I'm trying to say? You withdraw 50, you have 2000, so balance must be 1950. There should not be any changes in the value of what you have. This is what the cash is. Clear? All resources available in hand and at bank which should be able to use it immediately and with no in short, the cash, I can also give you a short answer. Cash in hand and cards. What about bank holding? That also cash. Please remember that. Cash in hand, cash at bank, and the bank overdraft. All these portals include the point. Okay. So cash in hand and cash at bank and bank holding. This is what the cash is. Second term. Cash equivalents. These are not in cash. These are not in the format of a cash, but you can still get the use of a similar cash.
Check.
No, check is an outcome from the bank or the, especially when you say check, the current account. Current account value. That all cash. Now what is cash equivalent? I'll call you that. Okay. So what is cash equivalent is these are not in the form of cash. However, when converting, there won't be any significant loss of value. Good example, if I give you the short-term deposits in the bank, overnight deposit, cold deposit, short-term deposit you call it. Sometimes some business in the bank they have extra cash in the current account. But then the owner thinks we can make some extra money. But in the meantime he don't want to put it in fixed deposit. If you put it in fixed deposit, what will happen? He cannot take the money as and when he wants. But then he goes to bank and he makes a different negotiation. He says that my friend, look, I have 2 million riyals extra cash in my bank, but this I wanted to generate some money, but in the meantime, whenever I need, I will use it. They say that okay, we have option for overnight deposit, or cold deposit, or short-term deposit. You deposit here. Whenever you need, you instruct us, we will transfer. You will not lose the value. For the time period you are keeping under the short-term deposit, we will give you some additional interest. So this is one example of cash equivalence. Example is short-term deposit. According to IAS 7 per standard, this is considered to be cash equivalent. So, hello, Adil, I am still in the lecture. I will call you back. Please wait. Right? So, this is second definition. That is cash equivalent. Third definition, cash flows. What do you mean by cash flows? Cash in and cash out. So, cash in and out. In simple, if I do define, this is what I will define. So, this has three examples. One is operating cash flow. Second one, investing cash flow. Third one, financing cash flow. So your cash flows we can categorize into these three groups. What is operating cash flow? The operating cash flow is the cash that we generate in our day-to-day ordinary course of the business. Like if I am selling vegetable, if I have a shop selling vegetable, my operating cash flow will be the day-to-day cash proceeds and the payments related to buying and selling vegetables. And what is investing cash flow? Suppose if I purchase a fixed asset, a motor vehicle, or if I sell a motor vehicle, or if I sell some of my shares, so those payments and proceeds are investing cash flows. Financing cash flow is to finance the business. Example, issuing shares, taking loans, or repaying loans, all that. Now the standard talks about dividends. When the standard talks about dividends, the dividends can be considered either here or here. It's up to the preparer to decide where to present the dividends. But if you decide to put it here, then you must never put here. It should be consistently followed. So these are the what we call 6 different definitions. After then, standard talks about.
So what about the administration expenses cash?
See, administration expense is part of operating activity, salary, rent, these are administration expense. And that is you require for the purpose of managing your day-to-day operating. Any question? So, this is but the 3 sections. After that, standard then goes on to talk about preparation. When you prepare, standard talks about 2 methods. First method, what do you think the second method is? Indirect. Direct method and indirect method. Now in the direct method, standard actually prefers this. But exam they use. Or in real life, people who prepare cash flow, they also use this. So now we will try to understand both. So once we understand both, then we know what the difference between both. First I will work out the cash flow statement. So we will have to work out the cash flow from operating activity. We will start with collections from customer. When I say collections from customer, there are two types of collections. One is day-to-day cash sales. If you have a cash sales, customer paying you, that also collections from customer. But if you do a credit sales, again the customer will pay. For the today's sales, he will pay after 1 month. So what I meant to say, collections from customer, the total of both. Further, credit card sales, debit card sales also will come here. What your question is?
Cash flow, that means we can make it daily, like it should be per year, like the thing.
If you are preparing daily, it should be for the day.
For the
Yeah. Same like profit and loss account. Clear? So I will receive the collection from customer minus payment to suppliers payments to employees. So I have the collections now. The difference in these two should be plus. Suppose if this is 100, this is 75, answer is plus 25. But suppose if this is 50 and if this is 75, then answer will be minus 25. So you may have a plus answer or a minus answer. So this we call it cash generated or used in operations. Then this bracket, I believe you understood now why I am putting this bracket. If the answer is bracket, then that we call it we use the cash. If the answer is plus, that we call it we generated the cash. Minus tax paid, interest paid, dividends paid. Now this dividends paid, I have written one asterisk here. Reason is, you have the choice to show it under operating activity or in a different activity. I will come to that later. So this is up to the choice of the preparer. So once the preparer decides, he should follow consistently. Then I have this answer, then this one, cash flow from operating. This can be again plus or minus. So these all are part of cash flow from operating activity. After that, we have cash flow from investing activity. They are purchase of non-current assets. When I say non-current asset, motor vehicle, land, building, shares, patent, goodwill, anything. When you pay money, we take it. Proceeds from sale of non-current. Suppose you sell a motor vehicle, so you have cash, so you need to bring it. Investment income. You may have royalty, dividends, or interest based on whatever the investment you have. So that you need to show it there. So this answer again can be plus or minus cash flow from investing. Clear? Next one. Cash flow from financing activity. When I am forming a company, I have to issue shares. So when I issue shares, I will receive cash. So proceeds from issuing shares. See, also please remember, when you issue shares, you have par value and share premium. So you may have the total of that. So ordinary share capital, share premium. Then receipt of loan. You probably have received loans. Repayment. This is known as cash flow from financing activity. Now you see, I have 1, 2, and let's now what you do is take the total of these three. So I will have that answer. This one net increase or decrease net increase or decrease in cash and cash equivalent. The total of these three items are together, we call it net increase or decrease in cash and cash equivalent. Then you have cash and cash equivalent brought forward. What you mean by this is the opening balance of your cash from the last year financial. Take the total. You have cash and cash equivalent. For example, this is 50, this is 25. You must have here. And you go and check your balance sheet. You should have that. So, this is all about preparing cash flow statement using direct method. Now, we need to understand how to prepare cash flow statement using indirect method. Only a little time, with that we can stop the class. So, I'll continue with that. Indirect method. Cash flow from operating activity. You start with profit before tax. And then you do one adjustment for, when I say NCI, means non-cash items. Adjustment for non-cash item. What is one example of non-cash item? Can you tell yourself?
Stocks.
No. In your P&L, you show as expense, but no cash movement.
Depreciation.
So, Depreciation is one example. Profit or loss on disposal of non-current assets. You sell a vehicle. You calculate, you do that calculation, you arrive the profit. Is this profit cash profit? No, the profit is not cash. Because depreciation has an impact there. So that is known as non-cash item. End of service benefits. Provision. Gratuity. That is one non-cash item. Amortization. Now, for fixed assets we have depreciation. For intangible assets we have amortization.
What is this?
Amortization? Now, goodwill. Let's say motor vehicle. You calculate depreciation now. So that we name depreciation. For any tangible asset, when you calculate depreciation, that amount of reduction, you name it depreciation. But the same thing if you have a patent or a brand or goodwill, and if you have to do that. Now when we study IAS 38, we said that there are two types of intangible assets. The intangible assets whose life is limited, intangible asset whose life is unlimited. So if you have an intangible asset whose life is limited, then you need to calculate amortization. If it's 5 years, like you sign a contract with somebody to have a patent for 5 years, and then you pay 2 million. So this 2 million cannot be taken as an expense in the first year. What you need to do? You need to divide this by 5, every year 400,000. That 400,000 is what I am saying, amortization. Bahar clear? Good. So, then we have, what else? Now there are other examples can come, but I believe this is okay. So you have this. Then we also have one more item, adjustments for changes in working capital. If I name working capital is equal to current assets minus current liability. Working capital is equal to current assets minus current liability. So, increase or decrease in inventory. If it's increase, you will show it as minus. If it decrease, you will show it as plus. Increase or decrease in receivable. Increase, you will show it as minus. Decrease, you will show it as plus. Increase or decrease in payable. Decrease, you will show it as minus. So remember the difference. Inventory and receivable, increase minus, payable, decrease minus. So you have this answer now. See, 1, 2, and 3. This total cash generated or used in. Suppose this answer is 1,500. That will be 1,500. Meaning, at this point, both answers must be equal. After that, I don't need to rewrite anything because the same format you will use from now. So with that, the formats are done. Now we need to know how to do questions. That we will discuss in the next class. Okay? Shukran.